G'day folks, welcome back to Pete's Investing. It's February the 4th, 2024. Got the natural gas price update, including some ETFs and shares, including BOIL, UNG and KOLD. The overall trend is bearish, and just watch out for a potential bounce with a small divergence in play currently. Could this be the start of a complete uptrend? So first we'll look at natural gas commodity price on the weekly, daily and hourly. Again, just repeating for those new to the channel, we look at these indicators. It looks busy, but there's a reason behind the madness. We've got the ADX 25 on the weekly down here. That's showing a bearish signal. It's pretty evident from the price moving to the downside. The CCI 150 is our divergence indicator, and that is currently tracking in line with the price. There were a couple of bearish divergences back here, and they pulled back and hit our targets. And this middle indicator, the CCI 400, is also our trend indicator, which most of the time aligns with the ADX 25, and in this case it's also broken below its moving average, which shows a bearish signal. On the daily, the ADX is bearish, the CCI 400 is bearish, and the 150 is also moving in line with the price. Again, there was a bearish divergence back here versus higher highs in the price. It pulled back, hit our target, and actually, in actual fact, it went further than that. And so on. I've got a bit of history, and I'll keep those rectangles in there for history purposes. On the hourly chart, you can see there more clearly. The ADX and the CCI 400 are both showing a somewhat neutral to negative trend. The CCI 150 is showing a bullish divergence. You can see there are higher lows on the CCI 150 versus lower lows on the price. Now it's actually bounced off that support line in the recent hours at 2042, and that's our initial target, and that happens to be the 23 to 38% level of that Fibonacci range before that divergence started. So that's our initial target in this area. I'll just move that to that area there. That's our target. There was a little divergence that bounced up from there in that little range, hit our target, then it bounced back down again. So these divergences can, at the very least, 90% of the time hit our short-term target, which is a 23-38% level. But if they can actually go higher, if they do go higher, then we look out for any 61% breakage of that area. Next on the charts, we look at ProShares Ultra DJ UBS, or BOIL. This is showing a mixed signal on the CCI 400 and the ADX. ADX is showing a pretty strong bearish signal, and the 400 is broken up above its moving average. Now, is that a bullish divergence? I'm not going to count it as one, but possibly. You can see there the CCI 150 as well. It's a bit hard to read, but the CCI 150 as well is showing higher movement versus pretty much a flat movement on the price, and that also could be a divergence to be aware of on the weekly. On the daily, bearish on the ADX, bullish on the 400 again. Again, is that a divergence? The 150 is pretty much moving in line with the price. There was a bullish divergence there that we've marked on a daily versus lower lows on the price, and that's our target area on the daily for a bullish divergence. On the hourly, also bearish on the ADX, bearish on the CCI 400, and we have another bullish divergence. These divergences on the different time frames, by the way, are not necessarily the same period of the bars. So in other words, this little bullish divergence is different to this bearish or this bullish divergence here. So here we've got another bullish divergence, and the CCI is still moving up, so it's still valid. You can see that the price has bounced somewhat. Now, for this divergence to fail, we need to see the CCI break below the entry point, and that applies to all the divergence. If this CCI fell below that area, then we consider it a failed divergence. But at the moment, that's still in play. Next, we'll look at United States Natural Gas Fund, UNG. Weekly, it's a bearish divergence on the CCI 400 and the ADX, somewhat neutral, or the CCI 150 is moving in line with the price on the weekly. On the daily, bearish on the ADX, somewhat neutral on the CCI 400, and the 150 is also moving in line with the price, so no divergence there. On the hourly chart, bearish on the ADX, bearish on the CCI 400, and pretty much it could possibly count that as a double bottom on the CCI 150 versus lower lows on the price. I'm not going to count it as a divergence, but very likely it may well be, but I'm not going to count it as a divergence in this instance. ProShares Ultra Short Bloomberg Natural Gas Fund, KOLD. On the weekly, you can see they're bullish somewhat neutral to bearish on the CCI 400, and on the CCI 150 that's showing a bullish divergence versus the price. On the daily, bullish on the ADX, bullish on the 400, and you can see there a pretty strong bearish divergence on the CCI 150 versus pretty much a double top on the price, and it's bounced off that 114.50 with a bearish candle in the last day of trade during the week. And lastly, on the hourly chart for this one, we've got a bearish trend on the ADX, somewhat neutral to bearish movement on the CCI 400, and again a bearish divergence on the CCI 150 versus higher highs on the price, and that's actually coming down at the moment as we speak. So I'll keep an eye on those and let you know how it goes in the coming hours and days. So look at some economic outlook for natural gas. So in terms of price pressure, upwards and downward movements. For upward pressure, we're looking at LNG exports. We're increasing demand for US LNG in Europe and Asia. Storage levels are lower than average for this time of year. Geopolitical tensions you need to be aware of. Wars in Ukraine and the Middle East, and that could be a help of potential disruption to Russian gas supplies, aiding to market uncertainty. In terms of downward risks, economic slowdown, potential for weakened global economic growth, and warm winter weather to be aware of. Other factors to consider is supply and demand. For production expected to remain steady in the near term, and demand increased domestic consumption for industrial and residential sectors. Technological advancements, carbon capture and storage is a key technology to be aware of, which helps reduce the environmental impact of natural gas. And looking at LNG infrastructure, expansion of LNG export terminals and pipelines supporting increased capacity. Some data sources for your further information should you wish to dig deeper into this. And so just be aware, in terms of natural gas, overall the trends are bearish. There is a slight bullish divergence on some of the charts, just to be aware of for potential bounce. Doesn't mean we're going to have a full-scale reversal, but it could just mean at the very least a small retrace to the upside. But overall, just be careful about going long, because we're still pretty much overall bearish. So if you got value out of the video, hit that like and subscribe button, hit that notification bell. Thanks for watching, and see you in a future video.